Hey, good morning, everybody. I am a little late. I'm taking care of some business. However, if this is your first time joining my live, my name is Chanel Jones, the CEO of Savvy Taxes and Consulting now. So let me turn this down. Hope you all are having a great morning. I'm just jumping in to let you already know how busy my schedule is, but I'm just jumping in. Hey, Ma. Hey, Pam, how you doing? Good morning. I'm actually just jumping in to give you three tax tips or three need to know tax tips that can help you this tax season. And the number one being, and first of all, I'm only going to be here for a couple minutes, right? We're going to talk about my Savvy Taxes affiliate program, like I always do. And then I'm also going to share with you three things that you can use this tax season that's going to help you if your guys are in this position. The number one was if you sold your house. Good morning, Pam Webb. Thank you. Thank you so much for joining. If you sold your home, your actual residence, not a rental property, but if you sold your home this year, you do not have to pay taxes on the proceeds and the gains from it. Did you all know that? So I did have one of my clients reach out to me to ask about this specific question, and that's one thing you do not have to do. That only applies for rental property. But if you lived in your home, good morning, Latoya. Thank you so much for joining and sharing. But if you owned your home and you stayed there at least 2 years, right? You have to be there 2 years. And if you just went ahead and sold it, the money that you gain, which is capital gains, you do not have to pay taxes on that money. That only applies if you had a rental property. So you own a property that somebody else lives in and you sold that property, that's capital gains, and you'd have to pay taxes on that. So, woohoo! That is great news for about maybe three of my clients who actually sold their home who didn't know that fact. So they didn't know it. They came to me and got the answer. So I wanted to share the information for anybody else who's in that position. And if you didn't know that when you sell your home, your residential home, one that you actually live in and sleep in and breathe in and eat in, then you don't have to pay taxes on that. If you sold that home and you made, let's just say $50,000, or you made all the money back. So you're good with that. Yesterday, we talked about 401ks, so I'll just touch on that really quick. If you did withdraw from your 401k, everybody is aware, even when you pull it at your job, when you pull from your 401k, they do inform you that there is a 10% penalty, and you do have to pay income taxes on that money. If you if you did, or if you want to withdraw from your 401k, or you're planning on doing that, definitely go back and check out my video that I did yesterday, because some 401k rules are changing starting 2020, and they're making it a lot easier. So go check that out on the replay. The next thing is, I believe I spoke about this in one of my lives, but okay, sorry, y'all, I got some messages coming in. But I'm going to reiterate this because, like I said, most of the things and most of the topics that I do talk about is because I have questions that are messaged to me, emailed to me, or people call me with different things. So if they have issues or if they have questions, I figure other people do as well. And so that's why I'm bringing it to you right now. So with that being said, we're going back over another tip. And that is, if you have a child in your home that's 17 years or older and they're not in college, you can no longer claim them as a dependent. So a lot of concerns were, well, okay, well, my child is still in high school. You mean to tell me I can't claim them? Listen, I didn't make the rules. So when my kid gets 17 years old, I'm gonna have to follow those same rules. But yeah, there's really no way around that. So just remember that, because we are approaching tax season. 17 years old or older and not in college, you cannot claim those children. Good morning, Taisha. Pam Brown, yes, primary residence. We were talking about selling your home. You have to have lived there for 2 years, and that has to be your primary residence. But the proceeds that you make from selling that, you do not have to claim it. You do not have to pay taxes on it. Good morning, Charlie. Good morning, good morning, good morning, y'all. A couple more things and then I'm out. right? I'm always going to leave. I tell y'all all the time when I jump on, I'm always going to end it with my tax affiliate stuff. So y'all get ready for that. And if you haven't heard about it, then just stay tuned, and I'll place it in the comments. And if you want to know more about that, definitely just hit me up in Messenger as well. So the last thing we're going to talk about, because y'all know I got my notes. This was another thing that someone had a question about. Let me go back. Okay, here we go. You must pay taxes. Listen closely, y'all, because there's a lot of people in this position as well. You must pay taxes on any forgiven, discharged, or canceled debt more than $600. So your creditor, they're going to send you a 1099-C is what it's called. So once you get that form, you do have to give that to your preparer, but you do have to pay taxes. So if you filed a bankruptcy, excuse me, this particular situation was one of my clients sold their, their home was repossessed. Their mortgage. Okay, I can say this because I'm not naming any names. So a couple, they were splitting, right? So with that being said, the husband was going this way, the wife was going this way. The loan was in both of their names, and they did not want to keep the house. So they gave the mortgage back to the bank. The bank forgave them of their debt. A foreclosure, if that's what it's called, when you give your mortgage back to, just like a car, when the car is repossessed, whether you give it back voluntarily or if they come and get it, it's repossessed. So Pam Brown says that a home is, I guess it's foreclosed. Pam, is it called a foreclosure when you turn your mortgage over to the, help me out, because that's not my, real estate is not my area of expertise, and I'm not afraid to say it. So I don't know that. So if it's repossessed, I think she said foreclosed. So it's still called a foreclosure if you give it over voluntarily? I'll wait for her to put it in the comments. But anyway, they pretty much gave their mortgage back to the bank, and the bank canceled out the debt. So they were sent the 1099-C for the amount of the debt cancellation, and they have to pay taxes on it. So they didn't know that, right? So the wife is the client. So she came to me, and I had to explain a little bit about the 1099-C and her having to pay taxes, because when they sent it to her, oh, it's called a foreclosure. Thanks, Pam. Thank you, girl. So when they sent it to her, they didn't give her any instructions. It was just mailed out. And so she didn't know she had to pay taxes on that money. So if you know anybody who is in that position, definitely let them know. There is a way to get out of it, right? You can qualify for an exclusion or an exception due to hardship, but that's something that you have to pull out all your financial records so that we can sift through it in order to send it to the IRS to see if we can, get you that hardship plan. So it's not taxed. Okay, that's what I'm saying, Pam. Pam, you're in real estate? Are you a realtor? She placed her website in there. So if you guys are looking for a home, this woman is knowledgeable. So definitely hit her up. But yes, that was a major thing. Like I said, I'm giving you things that people had questions about, my own personal clients. And so I figured that other people would have these questions as well. So that's what I'm talking about today. My personal topics keep changing every day because it's based on real life situations. And these are questions that clients of mine or future clients, because people who are not my clients, they, okay, good. Okay, if you have a business, definitely place it in here. Thank you for doing that, Miss Pam. But yeah, people who are not my clients also reach out to me as well, and they end up becoming clients. So with that being said, good morning, Demetria. With that being said, let me see. That will be the end of the tax tips. Those are 3. Remember, number 1 was if you sold your home, your actual primary residence, you do not have to pay. Well, if you sold your home, you have to live there for at least 2 years. and that was your primary residence, you do not have to pay taxes on the gains from it, only if it was a rental property. And then just a reminder of the 401k. If you did withdraw from your 401k, there is a 10% penalty, and you do have to pay taxes on that. Go back and check the replay. Yesterday, I did talk specifically just about 401ks and how they're changing starting January 2020. The other tax tip was if your child is 17 years or older and they're not in college or school, then I'm getting messages like crazy, then you can't claim them as a dependent, right? There's other tax things. I think it's a $500 credit that you can use for them, but you can't really they don't qualify as a dependent anymore for whatever reason. So, and then the last one was any unforgiven debt or any canceled debt, and you do have to pay taxes on that. They will send you a 1099. Whoever the company is, whoever canceled your debt, the company will send you a 1099-C, and then you take that paper to your tax preparer. Good morning, Latoya. You take that paper or that form to your tax preparer so they can do your taxes. And the last thing I'm going to say about that, just a reminder and a recap, is that there is a way to not have to pay, right, for that 1099-C or pay for that canceled debt, pay taxes on it. But you have to be in a financial hardship or financial bind, and you have to prove it. So if you are one of those people, then I would have to sift through a lot of your financial documents in order to send that to the IRS to, get that canceled out for you. So with that being said, I thank y'all for joining me today. I'm done with my little tax tips, on with the good stuff too. So as you know, if you joined my live before, I do have a tax affiliate program. And I have maybe over this weekend, I had 3 people hit me up who wanted to join that program. So you can find out more information. I'll leave my link in the comments section, and then also leave the form that you can fill out. Now, our tax affiliate program is designed for virtual tax preparers. So you don't have to come into an office. You don't have to rent a rental space. You can do it right from the comfort of your home, like me. Why, obtain different, overhead and bills? I already have bills here. So design yourself a little nook in the corner. I'm just telling you how you can do it, right? Because I had a lot of questions over this past weekend about, should they get an office or should they, stay in your home? For your first year, I totally, you guys staying in your home. I recommend that to the fullest. So you want to create less bills and stack up your money. So if it don't have to be a full-blown office. When I first started, I had a little nook in the dining room. So get yourself a laptop, a phone. Nowadays, you don't even have to have a printer. I do recommend one, but we have a whole tax app, and our program is run electronically right through the internet. We have professional tax software. We have a tax app where your clients can download our Savvy Taxes website or our app, upload their documents. So basically, when I say upload, it's just taking a picture of your ID, your W-2, or any tax forms that needs to be filled out, and is going to automatically upload to my system. And that way I can prepare your taxes. Once I prepare them, it's going to automatically go back to your phone via the app, where you can view everything and you can sign it. Once you sign it, it automatically comes back to my office, and we're able to transmit it to the IRS. So, we're going into 2020. We're paperless. As my daughter would say, we saving the trees, but she always talk about the turtles too. So anyways, that's just a little bit about our tax program. It is, the software that we use is great for beginners, so you don't have to worry about not knowing what to do. We have a full-blown online training program that you can join, and we have different packages starting from like a down payment as low as $99. So with that being said, if you're interested, hit me up in Messenger. I'll leave my contact information and the link to the tax affiliate form and packages in the comments. So like and please share this video if you found this. Good morning, Crystal. If you found this information valuable, and I will talk to you tomorrow. Have a good day. Yeah.